All right, ladies and gentlemen, I hope you had a wonderful weekend. I hope you got some rest, and I hope you're ready for some volatility because this is about to be the biggest week for the stock market this year. We got Jerome Powell, the summary of economic projections, a Bank of Japan rate decision, and a bunch of other data, but specifically with Powell. If him or that dot plot changes, that will either end this current rally or start a brand new one. So, Chad, I hope you're ready. I hope you guys are locked in. This is a very big week. We should be getting a lot of volatility, or at the very least, a lot of information. But so far with March, it's been a one-way road up, and we've been talking about this. If anything was going to change that, it is going to be the data this week and that summary of economic projections. So we got to talk about Japan, a couple of other things. You even got politics and all of that. But Chad, I have the plays. I have the keys. I actually have 5 stocks that we're going to go over. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, like I told you guys, this is the week. I've been getting really excited about it. A lot of people are watching this, and I can't stress it enough. That dot plot, the summary of economic projections, and the terminal rate for the Fed, this will determine everything. And why do I say that? Well, let's go back to the last Fed meeting where we had a summary of economic projections. That was December 13th, and we never looked back since there. We went down a little, never dropped below that point on the S&P 500. I think the NASDAQ and Russell bounced around a little bit, but we have been on a one-way road since then. It has gone straight up. So hopefully this shows you the power of the summary of economic projections. This is something I've been saying on stream all year in a very boring way. If you wanted to watch the market and even trade it, you didn't even have to watch it every single day. You could just wait every 3 months, get this data. If there is a change on the dot plot or anything like that that is material, just follow that trend because that has been big enough. So that's what all eyes are going to be on this week. The interesting part that I will say about this week, whether it is the dot plot in the Fed, I'm also telling you right here, we have Japan and the United Kingdom, but Bank of Japan is also going to be a very big event. But the thing about this week and these data points is that, let's say the dot plot comes out and nothing changes. Maybe Bank of Japan, they don't surprise as much, or maybe they choose not to raise rates. This is a very highly anticipated week, but at the same time, if there's no new developments and everything stays status quo, very well, this might just be one of those things where we don't get much out of it. Now, here's the deal. Does that mean, well, there's nothing actionable off that? No, because I would say no news, no new updates. That new rally, that would just be a green light to keep doing what we have been doing. So keep that in mind. But the dot plot, you have that. You have the Fed. You're going to get the Bank of the United Kingdom, Bank of England, and then Japan. This is going to be the next biggest thing, and this one is going to get a little bit weird. I've told you about the yen. I am still in that play. I'm actually about to roll one over here on Monday. The event is going to be Monday night around 8 p.m., so coming into Tuesday, but the Bank of Japan is about to raise rates for the first time since 2007. Now, we've discussed this and awaited this, and now here's this long story short. Everybody's been waiting for this to happen. Now, all of a sudden, because of the wage data that just came out, the Shunto wage hikes, this happened even a couple of months ago. People are feeling very optimistic. I believe economists are thinking it is a 80% chance that they raise rates on Monday night, Tuesday morning. So we're going to see how it plays out, but I have a weird inkling that they may still want to wait till April. So I'm going to be holding the yen regardless. I don't care. The sooner, the better. And that's one thing to look at, but the other part too is going to be how U.S. stocks react. So one thing, if the Bank of Japan actually raises rates, the next thing is how the yen moves and how that would even impact the dollar. And then the final thing, how it affects the U.S. markets, because people are worried about that whole repatriation. Once the rates start going up in Japan, people will have a reason, foreign holders, to sell off our bonds, even some of our stocks. So we'll see how that plays out. That is going to be a huge event this week, but like I'm saying, it really just does depend though if it actually occurs or not. And then on top of all of this week, you are also going to be getting a NVDA AI event. There's another one of these developer conferences that they're doing, and some people are asking if this will actually move the stock. Well, a lot of the AI stocks are waiting for it, and I had a nice little flashback to the last time about a year ago NVIDIA had one of these events. It was after earnings. Jensen Huang came up there with his leather jacket, and he started talking about numbers and guidance and what they're going to do, and the stock went crazy. So the way I'm looking at it for the NVIDIA and the AI event, it's going to just be on top of everything that we're dealing with here. If there is a mention of guidance, orders, or anything related to money, this could actually move a lot, or maybe we get announcements from other companies. So watch out for that. But all in all, we are going to have a full-on week. There is going to be data to respond to at every corner. I hope you guys are ready for it. That is key number one. But then key number two is all of this data. There's going to be a lot of moving parts this week. So at the very least, I hope that you keep this week simple. A higher median on the dot plot, that would shock the markets, and that would be negative. If the dot plot and the median for the same 3 rate cuts by the end of the year, if that remains the same, everybody is going to chill out, and they're most likely going to start reading into quantitative tightening ending as bullish. So hopefully you guys are following along. This is the main story. What happened at the last December meeting was the dot plot, the median for the rates, that went lower for this year, and the market started pricing in rate cuts. So the market even priced in more, and now came back and is matched up with the Fed. But this time around, it's been 3 months. This is what everyone's going to look for. If there's a higher median dot plot, and the Fed is now saying, well, maybe we might only do 2 rate cuts, that will really change how everybody's feeling, and it'll put to test this whole equity rally, because we have priced out 3 rate cuts already this year, and markets are still near all-time highs. But that would be the negative part. The good part would be if everything stays the same, and they're like, well, dot plot remain the same, we're still on the same path. That means everybody can continue doing what they've already been doing. But now here's the interesting part. I saw this chart over the weekend here, and what it is showing is that by the time we get to the June rate cut, there's only a couple of options right now. So depending on how you think inflation is going to move, if it goes to 0.1, this would be the trajectory. If it kept going from now till June at a 0.1% pace, if we keep going at the average of the past 6 months, we're going to be at like a core CPI of 3.6. If it goes in a little hotter by 0.1, we're going to be at a 4% core again. So everybody's kind of factoring in where we're going to be at June, and that's why these dot plots and the amount of rate cuts, because remember, this is going to be the second SEP, or I guess the first one of the year. But at this point now, there's only going to be a few more Fed meetings by the end of the year. Still a couple more to get info off of, but the point is, every meeting goes on, every data set comes out. Yeah, the Fed's saying they're going to do something by the end of the year, but every data point, every month that goes on, you are running out of time to do that. So we're going to be finding out this week if anything has changed, or if the Fed and Powell are going to be able to uphold the we still got 3, and then we'll still take in the data and give us another 3 months. But it should be very simple. And the final part, like I'm saying here, is that if nothing changes, dot plot don't change, Powell don't change. They did say they were going to talk about quantitative tightening, and the ending of that, Powell did want to talk about that here this March. So we'll see what they bring up with that, because that can also be something that, if nothing else is new, that will be new, and the market will like it, because it means you are doing one more step towards not tightening financial conditions there. So keep that in mind. That is play number 2. And then finally, play number 3. What am I saying? Key number 3. Beware the Ides of March, ladies and gentlemen. So this would be the time for the market to shift. People say it's like middle of March. That's where the Ides of March. I told you guys last week around like March 9th, March 10th, a lot of things have happened, but so far, everything is perfect. So maybe it doesn't have to do anything. And that's why I'm saying it really does boil down to the SEP. We'll see if the Bank of Japan, maybe that turns into a gray swan depending on what they do. But when it's all said and done, I mean, everybody's been looking for a shift. You haven't had the information or the necessary data acted upon by an equal or opposite force. The only thing that could do that this week is going to be Powell. So we'll see if that shift is there. Otherwise, we may just be chilling until we get to summertime. But let us get into the plays. So, right off the bat, I think that was a weird introduction or segue into the plays, but I do think you're going to have a lot of opportunities this week. I do have 5 plays, and I think they're very interesting. I closed out of oil on Friday. We made a couple of other plays as well, but I'll start with this one. I am still short on this, but hopefully I could get out of it before Wednesday, but gold. So I'm short on the micro gold contracts. Like I said, I may even want to close it out, loss or gain, right before the Fed, but this is going to be a very big week for gold. The last time they had a big move higher, just like the market, it was the Fed, and even lately they just bounced right off of that point before running into this. There's already been a front run on gold, so that's a big deal. And even part of it, not only do you have all this other stuff going on overseas, and there could be fear in the dollar and all of this, but a lot of people on Wall Street have been talking about this new added narrative of government spending and credibility playing into why gold is going up and why we might even see 10-year go above 4.5 pretty much. Yeah, the market may be doing good, but you're watching certain things in the dollar and bonds and even like gold going crazy. We've even had this government shutdown stuff. People are getting worried about the deficit and some of the more government factors playing onto the financial side more so than the financial market itself. So keep this in mind, but whatever Powell says, the dot plot, I think gold will be an ultimate big winner or loser. This was the lagger last time, so it's kind of leading coming into it, but we'll see how that one plays out. That is play number 1. Then play number 2. This one, I wasn't down too much. I played this one last week, Marvel. They just had earnings. Remember, AI chip stock had good earnings. Their guidance was pretty weak. They didn't talk anything about AI. Well, I made a play. I'm down like 2-3%. It's like $200 on it on the shares. I'm still holding them, but I think this is going to be my chip play for the AI hype this week. I may look for some of the SMCI weeklies just in case, but the general idea here is we either get something out of this NVIDIA event or not. But like I said, last week there was like a lot of people kind of waiting, and you could see this kind of, all right, let's sell the top a little bit, and everybody was kind of anticipating this event. So we'll see what happens. There's going to be a lot of eyes, but I definitely think there'll be an opportunity there. Watch out for that. That is play number 2. Then play number 3. This one, we talked about it, but Friday, it finally moved. But weed, MSOS, I'm still in those shares. I do plan on flipping out of it. I did not like how it was looking prior. I was going to average down around 7, but I didn't like how it was very quiet, and we weren't getting news. But finally on Friday, there was some news about like talks of reclassification. There was even Kamala Harris. She met with like Fat Joe and other people talking about like weed pardons and all of that. So we'll see how this all plays out, if there's any carryover, but you finally got some news and hype after it's been selling off for the last couple of weeks, and we are going to have more political primaries this week, so we'll see if any of the politics get into that. But I do think this play off and on, back and forth, swinging throughout the election, it's probably going to be a good one, so watch out for that. That is play number 3. Then play number 4. I told you there's a lot of plays today. Reddit. So they have an IPO. It's going to be on Fed Day on Wednesday, but here's the deal. A lot of people were asking me if I was going to play it. If you could get the shares before it IPOs, more likely than not, you will lose money. I think it was ARM or Birkenstock. If you bought shares before it IPO'd lower, you can lose, but market's at all-time highs. Everybody's pretty hype. Reddit has some brand image. It's probably going to go higher, so not a recommendation. You never know, but if you could get shares prior, that is how I would play this. I think you'll get instant guaranteed money if it opens up with the premium. Otherwise, we are going to be using our criteria. So just like the ghetto standard deviation, I showed you that little strategy. Well, we have our own little strategy for IPOs, and it depends on how much of the volume gets traded in that first 10 minutes throughout the day, when they trade, half their float, and then the premium that it opens at. So depending on how this stock opens up, we'll see. We'll run the criteria. This will be a potential play or not. We're just going to have to find out. It really depends depends if there's demand, how the market's feeling. They're going to be on Powell Day if Powell is good, so we'll see how it all plays out. But that is play number 3 or 4. Watch out for Reddit. Then finally, this one's funny. This one's great. I love this one. Are you ready? Bro, Nike on Thursday and FedEx. Earnings, LOL. Who would have thunk it? Yeah, remember we started our earnings and we were hitting 2 standard deviations. We hit Nike and we hit FedEx. That was at like December. Well, yeah, they're about to report. So remember, they're like early, later. It's kind of weird. I don't know. Maybe in a couple weeks we might like restart earnings all over again, even though it feels like we're just wrapping it up. But this will be a potential play. So watch out for Nike. Keep an eye out for FedEx. We'll see how those play out. There is going to be some other data too, like PMI data. And like I said, the Bank of England. But for the most part, I think our work is going to be cut out for us. Everything is going to be a potential play. I mean, everything from bonds to the dollar to equities to tech. So I don't think this week is going to be disappointing. We're going to have a lot to deal with. I hope you're locked in. Balance those books and stay in the game. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, don't ever take any day for granted. It is a blessing that you are here, baby. Amor fati. Make the most of every single day. The fact that you are still here today, that in and of itself is a blessing. And remember, it's easy to take for granted the things that we were given standard and for free. And we place value on the things that are easily replaceable. So, Chad, stay blessed. Stay grateful. I love all of you. God bless you. I will see you in the AM. Have a wonderful evening. Drink water and horn.